In today's video, I am going to show you the opening range breakout strategy in Forex. It is an important strategy that it's very easy for you to understand and it is highly profitable. So you have to pay attention. If you have any question at the end of this, you can just simply let me know in the comment section. There are two ways of trading the opening range breakout strategy. You can trade using the electronic open of the Forex market. It's simply the time that the market opens for everybody worldwide. So it doesn't matter if you are in US and it's night in your place, or you are in Nigeria and it is daytime. As far as the market has opened, you can wake up and trade at that time. That is what is referred to as the electronic open. And it usually happens around 10:05. Or let me just say 10 p.m. UTC +1, or it can be 9 p.m. UTC. Wherever you are, that is what is referred to as the electronic open. The market has opened electronically for everybody, so it doesn't matter. Now, it's different from the sessions open, where the time for London session is by 8 a.m. UTC +1, or for the New York session, that's not the sessions I'm talking about. So I am not talking about sessions. I am talking about that of the electronic open. So I am going to show you how to use this breakout strategy, the opening range breakout strategy, to trade the market. It's highly profitable if you know how to use it. So just remain with me in the video. I am going to show you how to go about that. We are going to use this particular time frame, the 4-hour time frame, to trade this opening range breakout strategy. Now you are going to check for the first two candles, the first two that occurred when the market opened on Sunday. If you hover over this, you will see this one is the Sunday. This is the Sunday candlestick. This green that you are seeing is the one that happened on Sunday. So I am going to delete this just to allow you to understand and see it clearly. So this particular green candle is the one that occurred on Sunday for this week. And then the first two candlesticks. So this red that you are seeing over here, this is the Monday's candle. This one is the Sunday's candle. Just take two of the candles, the first two candlesticks. So we are going to draw the highest point and the lowest point. Now, this is another trick that you have to be very, very careful with it to know how to draw it. We are going to look at the highest week, the highest point of the week, a wick of a candle, that's WICK, a wick of the candle. This is the highest point. So let me just shift this line first, and let me also shift this one. So you are going to see that the highest point that these first two candlesticks reach is this one, and the lowest point is still this one. So it's like a single candle has covered for these two candles already. A single candle has covered for it already. If this red was a bit higher than the previous one, this green, then it means we are going to pick the highest point of whichever of the two and the lowest point of whichever of the two. If a single candlestick has the highest and the lowest point in this instance, that is what is happening. That is what you are going to use to draw your lowest point for that week, and then your highest point for the week. So that is how to draw. If you have difficulty in drawing this, then just let me know in the comment section. What we have to do now is to wait for whichever of these levels, whether it's the top that will be broken first or the lower part that will be broken first. And we will wait for that to happen on the 4-hour time frame. You can see that market continued ranging. That is why it is an opening range. It pushed up and then melted down inside, went down again. It came as low as this point and then melted to enter inside of our range again. If you see this happening on the 4-hour candlestick, it is simply showing you that the market is not ready to go down. It means it wants to push up. Now we are going to go to our lower time frame to check, because you need to enter this market as early as possible to have higher reward and a lower risk. Because if you are to wait for 4 hours, imagine this has happened within 4 hours, it has pushed up. So your point of entry cannot be up here because your risks will be high and your reward will be low. So once you see that the first candle has melted inside, if it had not melted, that it sold down and closed below, the 4-hour candlestick closed below, and is not far from this point where we have drawn, we can take our entry there. But if you see it melting inside again after 4 hours, then you go to your lower time frame. And the lower time frame that I like checking is the 30 minutes time frame. And then you check if you will see any point that will break out above this early so that you can take your entry. So I am going to go to the 30 minutes time frame right now. I will click the 30 minutes time frame. Look at it over here. So I am there. So I am on the 30 minutes time frame. You can see what happened within that 4 hours. Market sold down, it could not, it kept ranging again and went back inside. And you can see that on the 30 minutes time frame. So since it failed to break down and it rather pushed up, you can see a single candlestick pushing up. That would be our point of entry. It has given us an early. So at the close of this breakout candle, you will take your entry there, and your stop loss is going to be below the range. So just below this particular point is the reason why I want the lower time frame to have an early entry. And your target point will be to clear the high of the previous week or any high that you can see. So if I'm to shrink this chart, if I'm to shrink it, the high that I'm seeing here is this particular level. This is an appreciable high that we are seeing. That is the high that we will be targeting, and that should give us 1.5 as our risk to reward ratio. 1.5 as our risk to reward ratio. Okay, so that is it. Now, this is decent enough. I prefer it to be ×2 reward compared to what you are risking. Is decent depending on how the market is giving you. This is how to trade the opening range breakout strategy, the up. Once the high has been cleared, you have no reason of using this again. You have no reason of using this again. Now, if it had broken below on 4 hours, we will sell and aim for any low point that we are seeing there. Now, go and backtest this up strategy and let me know if it is profitable for you. And if you have any further question regarding this strategy, just let me know in the comment section.